Hello and welcome to MindSync. I am Daksh Khanna and you are watching MindSync's analysis on Budget 2022. Well, the month of February generally starts with a lot of anticipation, particularly around the tax proposals. We have divided our discussion into 6 sections. Let's begin and understand what this budget means for you and your business. India is in the midst of its 75th year of independence, with growth at its cornerstone. This budget has provided a booster dose and a blueprint for fueling India's aspirations and expectations as the country commences its journey towards India at 100. When you read the fine print, there are not many changes from personal tax perspective. The government wants to move to a simplified and clutter-free personal tax regime. There are no changes in tax slabs, exemptions or income tax rates in Budget 2022. The extension of time limits for newly set up manufacturing companies and startups to be eligible for a concessional tax regime are big positives, as these sectors have become crucial contributors to India's growth story. Another important change, if you are investing in virtual digital assets, Finance Minister has provided clarity on taxation of digital assets. There is a very wide definition included in the budget on what digital assets are, and the intention is to tax the income on transfer of virtual digital assets at the rate of 30%. On the indirect tax front, the budget proposals aim at serving the government's long-term vision of Make in India and sustainable growth. In this direction, the Finance Minister has continued to rationalize various customs duty exemptions and has sought a gradual phase out of concessional rates on capital goods. Furthermore, as part of the Digital India initiative and promoting ease of doing business, reforms focusing on IT-driven customs administration of special economic zones have been proposed. Moving on to give you a snapshot of budget infographics, on the infrastructure investment front, revenue buoyancy and fiscal space allowed the government to focus on public investment. The major emphasis was on the 7 engines of PM's Gati Shakti as well as on social infrastructure, education, and digitization. Then comes digitization and technology, from the digital rupee to a digital university. Budget 2022 saw an unprecedented push for digitization. From demand generation and employment perspective, direct payments and higher capital expenditure allocations in public schemes are likely to create income and job opportunities. Measures such as swift payments, resolution of disputes and arbitration, and improved logistical efficiencies are likely to enhance the ease of doing business and boost investors' confidence. The Finance Minister announced targeted policies for specific sectors to support their recovery and boost growth in sectors with opportunities. This will help improve productivity, reduce fragmented growth, and create job opportunities. Now we shall move forward towards direct tax announcements. Discussing the key takeaways in direct taxation, tax exemption on COVID-19 related medical expenditure and financial assistance has been provided in case of death caused by COVID-19. Virtual digital assets defined, which includes cryptocurrency, non-fungible tokens. Extension of sunset clause for startups and new manufacturing units by 1 year. Introducing updated return of income. Exemption of amount received on account of COVID-19. Any sum received from employer or any other person towards medical treatment of self or family member will not be considered as a taxable perquisite or income from other sources. Entire ex gratia received from employer is tax exempt. Amount up to 10 lakh Indian rupees received from any person other than employer would be tax exempt. Tax exemption is subject to receiving amount within 12 months of death and fulfillment of other conditions as may be notified. Taxation of virtual digital assets. Income from the transfer of any virtual digital asset to be taxed at 30%, with effect from financial year 22 to 23. Payment of consideration to a resident on the transfer of virtual digital assets shall be subject to TDS at 1% from the 1st of July 2022. A gift of virtual digital assets is taxable. Announcements to promote IFSC. To encourage OBU's setup in IFSC, tax exemption is proposed on income earned by non-residents on transfer of offshore derivative instruments or over-the-counter derivatives entered into with an OBU. Tax exemption is proposed for royalty, interest income earned by non-residents from leasing of ships to units in IFAC. Similarly, income arising from transfer of an asset, being a ship, which was leased by a unit in IFAC to any person shall be eligible for a tax holiday for a period of 10 years. Extending the sunset clause for eligible startups and new manufacturing units has also been announced. It is proposed that benefits or perquisites arising from business or profession provided to residents shall be subject to TDS at the rate of 10%. No deduction shall, however, be required where the value does not exceed 20,000 Indian rupees. Coming to indirect taxes and specifically customs, definition of term proper officer under the customs law proposed to be widened retrospectively to include DRI and other officials appointed by the CBIC. Unauthorized disclosure of import-export data to attract penalty up to 50,000 Indian rupees and/or imprisonment up to 6 months. The proposed overhauling of CEZ laws is expected to provide a boost to existing CEZ infrastructure as well as attract fresh participation. Various facilitation measures shall also help existing CEZ units overcome existing operational challenges. Under GST, time limit for availment of ITC pertaining to a financial year extended to the 30th of November of the following financial year. Time limit for rectification of errors in GST returns extended till the 30th of November of the following financial year. Time limit for the issuance of a credit note for any supply made during a financial year has been extended to the 30th of November of the following financial year. Time limit for refund of taxes paid on procurements by specified persons extended from 6 months to 2 years from end of relevant quarter. Policy updates like Ease of Doing Business 2.0 impetus to infrastructure digital push to financial services have been introduced. Trust-based governance to be introduced, Center for Processing Accelerated Corporate Exit to be set up to reduce voluntary winding up timeline from 2 years to 6 months. Parivesh, a step towards single window green clearance introduced. Announcement of PM Gati Shakti and widening the gamut of the infrastructure sector. Transformative approach driven under Gati Shakti National Master Plan will create world-class modern infrastructure and logistics for movement of goods and people. Introduction of central bank digital currency. RBI Act to be amended to include definition of bank notes, which will comprise physical as well as digital form of currency. This is to facilitate issuance of digital rupee in the form of CBDC in financial year 22 to 23. Many sector-specific proposals have been made for automotive, bank and capital markets, life sciences and healthcare, real estate and telecom. You can through the slides to get an in-depth analysis of the same. That's it from our side on the analysis of budget. Stay tuned. Thank you for your time.